Hi, welcome to this course on basic cost concepts. In this course, we will understand what is cost. Then we'll also try to understand what is cost accounting and cost accountancy and the basic concepts which are revolving around cost. So before that, let us understand what is cost. Cost is nothing but an expenditure incurred in producing a product, that is from the manufacturer point of view, or incurred in rendering a service. So cost is basically an expenditure which is incurred in producing a product or in rendering a service. So the point of view is basically from the point of person who is manufacturing or the person who is rendering the service. So it is not from the point of view of consumer or end user, it is basically from the point of view of person who is manufacturing or rendering a service. So there are various techniques, there are various policies in measurement of cost. We are going to understand the basics of those techniques and cost in this course. Before proceeding further, let us try to understand the difference between the three terms, namely value, price and cost, because these terms we hear interchangeably. If you go and purchase a product, sometimes you would ask what is the value of this product, or you would ask what is the price, or you would ask what is the cost. But the point is all the three are different. Value is different from price, and price is different from cost and value, and vice versa. So we should understand the difference between these three before we get into the technical aspects of costing. So what is value? Value is basically the worth which we attach to any individual or a particular product or service at a particular point of time. So value is nothing but relative worth of a product for an individual at a particular point of time. So it is worth at a point of time. That is more important, because the product which is considered as valuable for one individual at a particular point of time may become less valuable at a later stage. Say for example, you are urgently in need of blood for some surgery, and that blood, if it is not available anywhere in the market, then you would be willing to pay any price to the person who gets you that blood. So at that point, the worth which you attach to that particular element is very high, but it can undergo a change when you don't have requirement for that. So that's about value. Whereas price is something which is paid by the consumer. The price is something which is paid by the consumer in exchange for product or service. I'll take the product from the seller and in turn I'll pay some money. Whereas cost is something different. Cost is different from value and price. What is cost? Cost is basically an expenditure incurred in producing a product or rendering a service. So here all the three has a different point of views. Value is always from the user point of view, whereas price is from consumer point of view, and cost is always from the point of view of the person who produces or renders the service. So what is important is this value is basically an opinion. I attach so much value now, I may not have more value at a later stage, whereas the price is based on the policy of the seller. The seller wants more margin, so he will increase the price. He's okay with a less margin, he will reduce the price, and the market is not doing well, sometimes he will even sell below the cost. Everything can happen. So price is basically a policy, whereas what is fact is cost. Cost is the fact. Price is a policy and value is an opinion. So we should have absolute knowledge on cost. We should have absolute knowledge on costing, and it is very important for success of any business, and hence this course, Basics of Cost Concepts. Let us understand the difference between these three terms: costing, cost accounting, and cost accountancy. What is costing? Costing is nothing but techniques and process involved in ascertainment of cost. So there are various techniques, there are various processes which have to be followed for ascertaining the cost, and that understanding is called as costing. There is something called cost accounting. What is this cost accounting? Cost accounting is basically a process. It's basically a process of accounting for cost, wherein you will begin with recording of income and expenditure, or the basis on which they are calculated, and this ends with preparation of reports and periodical statements. So cost accounting is basically a process wherein you will prepare income and expenditure, and it will end with preparation of reports. And why do we do all this? We do all this to know what is the cost. And why we are interested in finding cost? To fix selling price, and we are also interested in finding cost to control the cost. That is more important. The third element, what is cost accountancy? Cost accountancy is nothing but application of costing and cost accounting principles, and there are various methods and techniques. So it is nothing but application of costing and cost accounting principles, methods and techniques for ascertaining the cost and also for ascertaining the profitability. So it's basically for cost control, and it is also for ascertaining the profitability. So when you say cost accountancy, we also include presentation of information derived from them for facilitating managerial decision making. So the focus of cost accountancy, is presenting the information derived from costing data which would facilitate decision making. Let us understand the objectives of cost accounting. Why we should have cost accounting? See, there is a primary objective for study of cost accounting. It's basically to identify the cost. So that you can contribute to the profitability. Because if you identify the cost, you would know what kind of profit you can load on your selling price. And again, finding the cost would also helps in cost control. That is, you can find out the areas where your cost is going up, which you can control, and it would ultimately lead to cost reduction. So the very objective of cost accounting is to contribute to the profitability. How they can contribute to the profitability? Through cost control and cost reduction. To put it in detail, there are 5 objectives for cost accounting. Number 1 is ascertainment of cost. Here we will collect all the information related to cost by recording them in suitable heads of account. So such report would facilitate ascertainment of cost. The second one is determining the selling price. The cost accounting would help to determine the selling price, because selling price are influenced by internal and external factors. However, the selling price cannot be and should not be below the cost. So for that purpose, you should know what is your selling price. Number 3, the cost accounting would help in ascertaining the profit of each and every activity. Because once you know what is your cost, you can fix target of sales. You can fix what could be the profit you can make. So profit of each department activity can be determined by comparing the revenue with appropriate cost. So cost accounting ensures profit measurement on an objective basis. Number 4, Cost accounting also assists the management in decision making. How? Say for example, a particular customer asked for a discount in the price. So here the decision can be taken on acceptance of profit margin. Say for example, the cost of the product is $100 and the margin loaded by the company is 50, so they are selling it for $150. And if customer asks for reduction in the cost from 150 to 125, the management may be able to take a decision because still they are making a profit of $25. But if the customer asks for the reduction in price from $150 to $90, then again the management would be able to take a decision because their cost is already $100. They cannot sell below cost. So business decisions are taken after analyzing the cost and benefits of each option, and the manager will choose the least cost option. The fifth objective is to facilitate cost control and cost reduction. Cost control and reduction, this is one of the major objective of cost accounting, because in this way they directly contribute to the profitability of the business. So in the long run, higher profits can be achieved only through cost control and cost reduction, and cost accounting will ensure profit by providing support for cost control and reduction decisions.